Hi there, it's 7th of June and it's the weekend post. ES has been rallying, climbing within this green channel, as we all know. Last week's action first cleared the blue resistance and then the red one with some positive job numbers. I mean, relatively positive. Obviously, there's still tens of millions of people unemployed, but the market is not believing that it's going to turn into a major depression. As the economies are opening up, I think market is kind of discounting that kind of expectation in a very fast manner. And you can see this was the meltdown and this is a melt up. Obviously, climb, wall of worry. This is fear, much faster. Look at these. How many times did we get limit up and down during March? And this is now climbing that wall of worry, but I don't think there's so much worry. It's only kind of, euphoria is back. Everything is fine. All these people will find jobs and things will go back to normal. That's what the market is thinking. Also fueled by the trillions of dollars that has been newly printed. So I think S&P 500 is going to get to 3,500 and higher. So it's going to get past the previous high and keep on rallying. And I'm going to do the long-term charts, and that's also kind of valid there, that all those long-term channels are still intact and very much in control. Dow Jones had cleared the blue resistance, the blue internal resistance last week. You can see here. Those were because of the job numbers, so we may see the retracement of that. We may see the retracement of this spike. We don't have to, we may. And if we do, it will only be another buy signal or another dip to buy into to get to new highs. And the previous high was close to 30,000. We are at 27, so there's another 3,000 points to go within the red channel. And the red channel is textbook, extremely good technical action. First, the blue bull flag was broken. You can see here, this was the blue bull flag, back tested, and the blue top band was broken eventually. So this was the main blue bull flag, and this one was the one afterwards. And when both of them were broken, the green sideways channel didn't stand a chance. And you can see here on the third touch, it broke the green channel as well. And now we are headed towards $30,000. Nasdaq just reached a new all-time high. Surprise, surprise. I mean, obviously, it's not a surprise at all. And the long-term charts that I will post today will show what the long-term channels were still intact, and it was calling for a new high, even despite the plague and everything. Nasdaq, obviously, online stores, online businesses made huge money during the lockdown, so that's also the reflection of that kind of money that's been gained by these brands like Amazon, Netflix, etc. Now, the blue resistance was broken. It's a small, tiny resistance. It wasn't a big deal, but it is broken, and it is going to be back tested probably. The golden top band may hold it, and we may see a pullback from Nasdaq by Nasdaq very soon. So if the red golden top band holds, we may see a pullback all the way to the golden bottom band and then keep on rallying higher. Russell, also massively bullish. We've been buying left and right Russell for since I think these laws, we turned completely bullish again. The major signal of bullish came from Dow Jones, and that was the main idea, to turn back again super bullish. Okay, and let me show you the bull flag that was responsible from this entire entire rally. And it was the green one. You can see here, that's why also we turned bullish after this bounce here. So now the blue top band is obviously the target. The green resistance was broken, back tested, no surprise. The red, if the red channel, so let me show you, if the red top band is the target, and I think it may well be. Buy the dips is continuing. Do not short this market. Do not short. Don't be sad like, oh yeah, I missed this pullback, I could have shorted. No, you have to buy into this market. Buy the dips. Don't be sad that you're missing the shorts. Be sad that you're missing the dips to buy. As long as all these channels are holding, there is no reason to short this market or pick the tops, etc. And FTSE, perfect red sideways channel. That was like a nice upsloping bull flag. As you remember, the breakout I called for the same height, so 6,750 is the target. The golden resistance was broken, back tested, and now it's testing the internal blue resistance right here. And I believe by looking at the entire action, entire bullishness of this market, we're going to get smashed through this and get to 6,750 and possibly, most probably higher than that to get, these are gaps here, there's a gap here, all these gaps will get filled. And the blue top band is the ideal target at 7,550. Sorry, 7,500, maybe, I mean, depending on how fast it gets there, obviously. And DAX is the ripper. I mean, look at this massive rally. And the green sideways channel was broken. And the red top band is the target. The blue diagonal resistance was broken. The main bullish signal just recently was the break of this internal red resistance. Yeah, you can see here it was a resistance holding. Yeah, this one all the way, and now it was broken. It didn't even backtest properly, and now it's the blue one is broken. So there is more upside. There's a gap here, all the way up, all the way up. And so let's talk about Brent oil. Brent, let me show you the weekly. So the Brent bottom was at 16 something, 16 handle, and that was the blue bottom band. That was to the point law. We caught that, and basically the golden resistance is broken. The red one is holding. So if Brent dives to this red bottom band, we should be buying into it again to get to 45. But if this red resistance breaks to the upside, which is very possible because it's trying to fill this gap, and that is at let me show you, 45.60. So there's another $4 to go. There is no reason to short Brent. Natgas, clearly the break of the golden resistance faked. So we took a 25 tick stop on this one because it went slid back under it. That is typical Natgas. The blue the blue support is broken. The green bottom band is possible support, but if it breaks, then it becomes, I mean, if it holds first, bounces, and then breaks, that would make it a bear flag, which would target something below this law. That is unless the red support holds and rallies, sends it to 2.1. So let's see if the green bottom band holds first. If it holds, then the break of it would be clearly a short entry to target the red support rail. And if that one breaks, I think it will revisit this law minimum. and then maybe further down to 150. That can be possible too. So nasdaq is not the easiest market because of all this chop right now. And gold, let me show you. This is gold futures. So 1 second. The black support just got cleared, and it wasn't the best of the supports. Not the best of, I mean, not the most accurate one, but it was not too bad. So if we look at it this way, okay, yeah, this is the black support that was broken just on Friday during the sell-off, and the green previous support. So it was previous resistance. It was back tested, bounced, back tested, bounced, and it's back tested again. So this is the third time. If it is broken, the only hope for the gold, it would be the blue bottom band, and that blue bottom band may be the formation of this blue channel, which would be a potential bull flag. But if the blue bottom band doesn't hold at all, then gold is in serious trouble, because then the red bottom band would be next. So I think gold had missed the chances to keep on going, and this is the spot. It's easier to show it on the spot. It missed the chances to break the red channel to the upside. Now it's coming back down. It's kind of selling, and obviously the sentiment is extremes. So this is not good sign. So we may be headed for a deep correction. And silver, remember we bought silver and we closed at a right. I mean, the buying point was right here, that 1592, and we basically closed the entire position right around 18 something. So that was a beautiful trade. I think more than 270, 280 ticks. Now, obviously, the red channel is the one in control. There is a small gap here. I mean, platinum filled its gap, and we may see this gap get filled. But during that gap fill, it would break the red support and the green one. So this green triangle didn't hold at the backtest. You can see last week's short signal was the break of this golden bull bear flag, and now we are forcing, if it drops below 1720, that would look bad. At least for the short term, it would look bad. I mean, if it does break that, and I would be a massive buyer at this golden support. There is no doubt that this golden previous support then became resistance, and then the recent rally smashed it. And now I think if it gets back there, it would be another buy signal for me. But that is a little bit of a long way at I think just above 16. We have to watch that as a support. And forex, euro, as I indicated, the green top band, which was slightly damaged, you can see here, and the golden top band, they both held as double resistance, despite all the other currencies surging against the US dollar. Euro kind of stopped. The break of this golden internal resistance was the obvious bullish signal together with the green, and now this blue steep channel is holding, but if it breaks, then we may see a bit more downside. And if this green channel becomes a big bear flag, then we may see, I mean, it has to break this green bottom band clearly 1, 2, 3, 4 touches, and if it gets there, it would break it to the downside, I believe. But if euro at some point smashes this green top band, then that setup is bye-bye. There will be I don't think it will get back to the green bottom band again. So I'm long-term US dollar bearish, and we'll see. And this is, for example, pound sterling. There is, I don't think 115 will be revisited for years and decades to come. That is on the long-term chart very evident. I'm not going to show it here. That's for subscribers. But I'm going to make another case, reiterate that pound has bottomed out at 114 earlier this year in March. That's it. And you can see the red resistance is broken and back tested last week. And but the blue channel top band is holding. So pound, if it wants to keep rallying without falling below the red support, it has to smash this blue top band and keep on going very, very soon. So we'll see. Aussie dollar also massively bullish in my opinion, not because of this red channel, but because this was the COVID crash. This blue support was holding because of the COVID US dollar panic. It basically broke it to the downside. I don't think it would have happened without the COVID panic. Now it's broken back above, so it reclaimed this support, and I don't think it's going to fall back below it. Maybe we at the red top band we'll see somehow some sort of a pullback, but afterwards I expect more upside. And for the same reason for Kiwi, you can see here Kiwi, the sideways green channel was holding until COVID, and it was going to rally to 85 in the coming years, months, years, whatever. But it was stopped, and you can see here this was COVID panic, but now it has reclaimed that green support again. You can see we bought it at 62.45. We closed somewhere here, but I'm going to buy it again, especially if, let's say, if the blue resistance holds, maybe a pullback. And at the end of that pullback, I'm going to be buying Kiwi again. That is what I have in mind for Kiwi. All right. Hope you have a good weekend. Happy trading. Keep in touch. Bye, guys.